Good afternoon, everyone. Welcome back. I hope you enjoyed your lunch, and I hope you had an opportunity to make new connections or reconnect with old connections. So now, as we enter into our third session, Make Individual Accountability Work, the Challenge for Industry Regulators, I want to introduce Amanda Blanc, Group Chief Executive of Aviva, to give some introductory remarks before we start the panel. Amanda started her career as a graduate at one of Aviva's ancestor companies, Commercial Union. Following success in senior executive roles across the insurance industry, she came back to Aviva as Group CEO in July 2020. She is the HM Treasury's Women in Finance Charter Champion, co-chair of the UK Transition Task Force, and is a member of the UK Prime Minister's Business Council. Welcome, Amanda.
Okay, well, thank you very much for your kind introduction, and thank you to the CBI for inviting me here today. It's absolutely great to be in Ireland, and I really always enjoy my visits here. Everybody's obviously very warm and friendly wherever I go. Often, of course, I come here to visit my Aviva Ireland colleagues, and I'm always inspired about how hard they work to deliver for our Irish customers. So when I did become Group CEO of Aviva in 2020, I divested the business from many international markets and focused on 3 core markets. And I chose to keep Ireland as one of those markets because I believe that the Irish market has great potential, and naturally we see very exciting opportunities for Aviva here within both the general and the life insurance markets. As Group CEO of Aviva, I have to mention the fact that we are, of course, in the Aviva. And I think the sponsorship deal that we have here is one that we really value, as we know the importance of the stadium to the city of Dublin and, of course, also to the country. There have been very many great sporting occasions here, and I've had the pleasure of watching the rugby here on a day where Ireland won a very highly entertaining Six Nations game, even if it was against Wales. But we're not here to talk about rugby. We're here to talk about accountability and governance in financial services. And so before we start the panel session, I'll share some of my thoughts and experiences as an individual with accountability and the leader of a company in the UK where we have the SMCR regime. So winding the clock back a few years, I think it's no secret that confidence in financial services companies was rocked by the financial crisis. And as industry leaders, giving consumers confidence in the firms that they place their savings, investments and insurance with is so important. The stakes are very real, as many, particularly in the US, found out during the financial crisis. So globally, we've seen senior manager regimes implemented in a number of jurisdictions, including the UK, Hong Kong, and Australia. And part of the reason for being here today, of course, is that Ireland is now on the cusp of its own regime. So my experience of SMCR is that these regulations aim to ensure individuals with the right level of competence are appointed to senior roles, and that once they're appointed, they oversee a very clear set of accountabilities, and that they act with integrity and professionalism in these roles. So if I can say one thing about the implementation of a regime, it is that companies that already have the right culture should not be concerned. Companies where customers are at the forefront of decision-making, where the right behaviours are exemplified at the top, and where there are consequences for those who do not live up to those standards, these companies are already acting in ways that will be aligned to the purpose of a senior manager regime. So at Aviva, we place a strong focus across the organisation to ensure colleagues at all levels do the right thing and abide by our Aviva values and our business ethics code. As Group CEO, I chair an accountability review panel, which oversee matters relating to employee conduct, and that ensures proportionate and consistent action is taken across the organisation. So doing the right thing can involve making difficult decisions, but we as senior leaders must show our colleagues that we are willing to make those difficult decisions and take personal responsibility. And this empowers others to do the same. And so the introduction of regimes like the SMCR does not alter good practices, but it encourages them for a more consistent approach across the industry. So naturally, any regulation does come with the cost of compliance. And my advice to individuals who will be senior managers under such a regulation is that most of this already aligns to good business practice. Individuals should be aware of their accountabilities and how they oversee and how they delegate these. And of course, it does go without saying that there should always be a good, constructive dialogue between firms and regulators to ensure the right balance is held between regulation that achieves its purpose without becoming overly burdensome. So it is that constructive dialogue which has allowed the SMCR regime in the UK to evolve over time. We have seen evolutions such as the introduction of the non-financial misconduct impacting the fit and proper assessment. And I'm sure there will be further evolutions over time as the world around us changes. So I'm confident that with a senior manager regime in Ireland being introduced in the near future, that firms and regulators will work together to find a system that works for all parties, but most importantly, one that helps us keep consumer trust in our industries. Thank you.
Thank you, Amanda. I'd now like to invite the participants of this panel to the stage. Gerry Cross, Director of Financial Regulation, Policy and Risk, will chair the panel. Joining Gerry along with Amanda is Patricia Callan, Director of Financial Services Ireland, Ibec. Blanaid Clarke, Professor McCann FitzGerald, Chair of Corporate Law, Trinity College, Dublin. Spillane, Chief Executive Officer, Institute of Directors in Ireland. And Willemieke M.E. van Gorkum, Director, Supervision Policy, de Nederlandsche Bank. Thank you.
Thanks, Denise, very much indeed. And thank you, Amanda, for setting the scene so well for us. I think you've touched on many of the aspects that I think we will explore in this panel discussing the new individual accountability frameworks. Just to set the scene a little bit before we dive into it specifically in the immediate context. So obviously, many of you will be aware, we carried out our consultation on the new individual accountability framework, and we had 3 months very good engagement, which I'll come back to in a moment. By way of recap, the framework consists of a set of conduct standards, which applies generally and are very much in line with kind of what you'd expect, normal good conduct to be. Enhanced conduct standards then for senior managers, the PCF roles, and then of course the SEER, the Senior Executive Accountability Regime, which specifically has a more limited scope of firms to whom it applies, sets out the inherent responsibilities of the senior management roles that are in scope, talks about some prescribed responsibilities, so things that firms must make sure are being done in the firm, and sets accountability for that. So in structure, it's a pretty straightforward, but of course, the devil and the challenges in the detail and the implementation. At the heart of our consultation were our concepts of proportionality, predictability, and reasonableness, and trying to articulate how we saw the framework working on the basis of those 3 concepts: proportionality, predictability, and reasonableness, and asking whether you felt we were getting that right. Cost benefit was a really key part of our discussion. We set out what we saw as really being the potential costs, and we saw those as really having 2 aspects. One would be if it became a very onerous type of reporting and compliance framework, that would be undue costs. And also if it had an unduly dampening or defensiveness-inducing impact on the industry, whereby it became risk-averse, that would be a challenge. So we're really focused on trying to get the substance right. Can I say that the engagement process, and with thanks to so many of you here, has been a really good one from our point of view. We got a lot of challenge, but a lot of fair challenge, and some really intensive discussions along the way, from which we hope we have learned. And we will be, as the Governor said this morning, we'll be publishing our feedback statement and the final regs next week. Some of the key points that came out in the consultation, which we'll talk about now, were there was general support for the framework. taking it all in the round. Was concerned about the timelines. They were concerned about maybe being over-detailed at times in terms of the prescribed responsibilities. Some concerns about how we configured the job sharing rules. Good deal of concern about non-executive directors, which the Governor spoke about this morning, and some concern about some of the other issues that were there. All of which I'm sure we'll discuss now, and we'll be coming back to them in our feedback statement next week. So without further ado, let me turn to the panellists. I won't, Denise has introduced them, so let me turn straight to Patricia, if I may. Patricia, as a starter for 10, from the point of view of Financial Services Ireland and your own point of view, what's your overall perspective on the package before we dive into the detail?
No, I think certainly the industry has welcomed this whole process, and the consultation has been very open, and it was great to hear the Governor this morning say that some of that had been taken into account, and we look forward to seeing the feedback statement. For us, this is really critical in terms of restoring public confidence and trust, which is the reason I think that we were embarking on this journey. And the firms are very much want to see it in that light. I think in practical terms now, once we've moved beyond the legislative piece, the regulatory piece, really everyone is just focusing on trying to get compliant in time. So it is a short timeline in that context. So working through really practical issues in terms of who's responsible within firms, in terms of all of the HR issues that need to be dealt with, updating policies and all of that. So there's a lot of technical things, I guess, that we're helping companies to get through. But I think in the longer term, the bigger piece will be actually how this plays out for the industry. So we know from talking to you that you really believe that this is about helping us to be better as an industry, and we want that. And good firms, again, as you said, should have nothing to fear from this. But equally, we need to message that very clearly into the public, because in Ireland, unfortunately, there's always this trend that if you bring in a piece of legislation and people want to see people convicted under it, and I think, then it's viewed to fail if there isn't a sufficient level of cases. So we need to be really clear that if it is working really well, as we're all working really hard to get that message across, we need to be clear that that's because that's how you intended it, how industry has responded, and you really can trust our sector and our reputation, not because the banks are getting away with it, or that sort of narrative. So that the reputational issues, I think, are really important, and more important potentially into the future than the operational issues.
Great, thanks, Patricia. That's very, very helpful framing some of the issues there. I think that point about, we've talked a lot during the consultation around sort of our respective intentions and perspectives. Well, that's a really interesting aspect as well, which is beyond what in the ecosystem we might intend. So actually, what will be the public expectation and the media expectation, and that's an important dynamic, I think, as we know. Blanaid, maybe if I turn to you, I know that you have, from your various perspectives, you've taken a very close interest in the individual accountability framework legislation, and now the regulatory framework. Maybe a similar question that I asked Patricia. Again, standing back from it and looking at it in the whole, what's your general perspective and reflections on it?
I'm optimistic. I think it's worked well in other jurisdictions. I agree, when it was mooted first, there was very much an emphasis on the punitive dimensions, and it was great. Sierra's coming in, we will see people in orange jumpsuits, and that's going to be fantastic. And it missed the primary function and advantage that this is going to bring, which is it's going to strengthen internal controls. It's going to, and so just taking the example of the responsibility maps. So for the first time, management, senior control function holders, employees will know exactly what they are responsible for. And I think that's going to strengthen the ability of the fit and probity process to work, because when you're determining whether you're suitable for a job, you now know, well, what is the job that you have to do exactly, and do you have the skill set? And I think that's really positive. I think that it is important, and I was interested in the Governor's remarks earlier in terms of non-executive directors, and it is important, and I think it's good to have a pause so everybody is clear what's expected of them. But the board is the key decision maker in any company, and the non-executive directors are often in the majority. And so it is absolutely essential that they are involved, that they have clear guidance as to what they do. And this isn't unusual in company law, for example. We don't make a distinction between non-executive directors and other directors. So as long as the guidance gives very clear rules, and the guidance as I've seen it does, it indicates there's a function there in terms of monitoring management, looking at strategy. And over dinner we were having this conversation, and as a colleague at the table said, that's what we do anyway. So this really is good practice, and as Amanda mentioned earlier. So I would welcome this. I think there is nothing to fear in terms of blurring the lines, because the requirements, both the conduct standards and SEER, say very clearly that the issue is if there is a failure to take reasonable steps. So once there are reasonable steps taken, and the reasonable steps are what good non-executive directors are supposed to do: challenge, understand, monitor. So I'm optimistic.
Which we would be too very much, but I mean, I suppose one of the things we heard during the framework, for example, would be around. So you mentioned reasonable steps, and this idea that in practice, does it, you know, where you have non-executive directors, for example, who are who have that oversight perspective, in practice, will it work out as we might describe it in theory? I mean, do you have concerns around that? Or
I think directors have concerns about it in areas where specialist skills come in. And we talked a lot this morning about AI and the increasing demands and the black box, and the role of directors there to understand what's going on and to really get under the bonnet, or in terms of ESG. So it's a very demanding role. But once there is an understanding, again, and it comes down to implementation, once there's an understanding that what is required is not a standard of perfection, and again, that's so important. It's a question of exercising good judgment, and if you have failed but exercised good judgment and taken proper steps, then there should be no question of penalties.
Great. Thanks, Blanaid. And we'll come back to some of those issues, I'm sure. Caroline, the Institute of Directors has been really actively engaged in this discussion, and has brought a lot of, I think, insight and critical thinking to the table, which has been really, really welcome. And at the heart of your institution, your organisation's mandate is also governance, and high quality governance in the Irish economy. And you've been very focused on the role of NEDs, non-executive directors. So how do you think about this issue that we just sort of raise with Blanaid, and more generally on the framework?
So first of all, thank you for inviting us to participate, and I'd also like to acknowledge the statement that was made this morning by the Governor around deferring the application to independent non-executive directors for a period of a year while learning is taken on board, and I think that the concept of kind of embedding something and learning from it is really very helpful. And, you know, just to acknowledge as well, Gerry, the work that you did with us on the consultation process that we did with our own members to elicit views and feedback on this. And you're right, there was quite a strong level of engagement by the membership of IOD Ireland, a third of which is from the financial services sector. So, and just to say also that we will be really open to collaborating in whatever way is appropriate over the course of the next period of time on taking, you know, those learnings and consulting with our members and feeding that back to you. So I suppose in terms of the IAF, the Act, the regs, the guidance, they play an absolutely important role in promoting safety and soundness in regulated financial services firms and strengthening that link between seniority and accountability. So we absolutely certainly see that. And it's really important that, and we would say that firms engage with this, and not from a compliance perspective, but for all of the benefits that it can bring. And I suppose naturally, and Blanaid touched off this, that when something new comes in, there is going to be a high degree of nervousness around it. But I think that there's a lot that firms can do to address that, and there's also a lot that working with the regulator can be done to address it. But I suppose it is new, and notwithstanding the fact that it's been implemented in different guises in other jurisdictions, something new is something new. And I suppose even the title of this panel has been around the challenges for industry and regulators. So, there have been challenges, and certainly, the theme of today is around risk and de-risking. We will be engaging further on that. And I suppose one of, some of the challenges that came out, and I know we'll be talking more later on about collective board responsibility, but in looking at this item, or in in looking at the consultation, the challenges that were coming back to us from members were all around, I suppose, how do you align this issue of one person not having unfettered control with collective responsibility. Some feedback on ensuring that board diversity was kept to the forefront, I suppose this whole notion of decision making under uncertain circumstances, and as I said earlier on, we had a lot this morning on risk and de-risking, and we certainly are in a circumstance where a lot of boards are trying to make decisions in a very uncertain context. And I suppose one of the things that came back to us in the consultation was the benefit of hindsight, and not having decisions evaluated with that benefit of hindsight lens. I know we're going to go on to talk about collective board responsibility later on, so I'll just leave it at that.
Maybe I'll because I think the response that the IID submitted was very instructive and had thought through a lot of these issues and along the lines of what you described just now. So obviously that question will come to the moment about collective versus individual. In your description there, you sort of said, okay, well, one concern would be, you used the phrase sort of the benefit of hindsight, in a way that's to the question of whether or not we, as supervisors and regulators, will sort of come in with those very clear hindsight glasses and say, well, you got it wrong, and that kind of. But I mean, and so that's something for us to work through. Is there also a concern from the non-executive community that actually, even if the hindsight bit is dealt with, and even if we get the right call, that actually this is just not appropriate to apply to non-executive directors, or is it more sort of a contingent? No, if you get it right, it'll be okay. Is that a fair question?
I think there's probably just an expectation gap, and I think using the next 12 months as an opportunity to try and close that gap between, well, what actually is intended, and maybe have a little bit more time to explain it through, because it has been demonstrated to have been implemented, as I said, in other areas. So it is about closing that expectation gap. I think that's probably one of the key issues.
That's really helpful. Thanks, Gerry. Willemieke, first of all, thank you very much for being with us. It's fantastic to have the perspective of the Nederlandsche Bank today. And you have been very focused in the Netherlands and the DNB. You've been very focused on culture, governance, and supervising to achieve better culture and governance. I mean, so maybe without jumping straight into the culture question, which we can come back to, but when you look at this kind of package that we're describing here, the individual accountability framework, I mean, what are your reflections from the things you've seen and learned in the Netherlands, and what do you think about packages like this?
Well, thank you for inviting me to this panel. Honored to be here. I think to promote good governance, to promote healthy culture, and to be very clear on individual accountability can only be applauded. I think we are very positive about a framework like this. It's in line with the European legislation where there is emphasis on clarity as for roles, for tasks, for responsibilities, for senior management, for an executive board, but also for senior executives and for key function holders as well. I think it also fits in neatly with modern governance views that we have in the Netherlands, where we also took on board to look at behavior and culture as well. What I think is what a framework like this can do, and that is a positive effect, is that it can enhance the feeling of ownership, knowing what is in your own power and in your own control. And that is a good thing, because what we see in our supervisory practice is that board members usually are quite overburdened with decision-making responsibility. And it would be a good thing if senior executives, even the whole organization, are empowered to play their role and to be more enabled to make decisions of their own. There is a huge transition needed to get a focus on consumer interest. Good steps have been taken there, but we are not there yet, I think. So it can be very powerful to have a framework like this. We were honored some years ago to be asked to assist the Central Bank of Ireland during their investigation on retail banks. And we had the same finding there. We even suggested to come up with a framework like this. That said, there are some challenges to be met. I would see two of them have already been mentioned. Perhaps defensive considerations, and also you don't have to lose the overall perspective on a financial institution as well. And there is more to that. But in general, I would think this is a very good step to take.
Thanks, Willemieke. And I really like the language you use there, because I think it's language matters a lot in the discussions we've been sort of having. It sort of really matters how we all articulate and think about this. And I think you talked about sort of the empowering of the senior management and the board as individuals and collectively. I think that's really what's kind of at the heart of some of the things we think about when we're trying to articulate and implement this, which is how can we move to a situation where, as regulators, we are better empowering firms, and we're not sort of in a, well, we'll tell you, and then you do, and then we'll check. But rather, how do we create a structure whereby we're really empowering firms, but nonetheless, we are there in our oversight and supervision role. And that's, of course, easy to say and much more difficult to do. Amanda, you framed the discussion really well at the beginning, for which thank you. Two things maybe to ask you on your reflections on what you've heard. I mean, in the UK, there's a slightly different approach around non-executives, so it only applies to non-executives who are chairing particular committees. I mean, do you have a reflection on that? And the other thing you mentioned, I think, sort of the question of when you talked about sort of success, you talked about the need for ongoing engagement. Can you maybe say a little bit about your reflection on how that has worked in the UK, that kind of ongoing engagement? Okay,
I mean, so first of all, I think, so we're 5 years, as insurers, we're 5 years into this regime in the UK. And if it gives you some comfort, you know, it is not something we wake up every morning and think, okay, right, let's get my statement of responsibility out and let's make sure that today I'm going to work through everything on that statement of responsibility. So it is just something that it's a new language, it's a new way of thinking about it, and therefore I totally understand people's nervousness. But I think in practice, in reality, you know, it is a very, very practical way of running and managing the business and holding people to account that should be held to account. Your point around non-executives, so yes, it's the chair of the audit committee, the risk committee, the chair of the board, and then obviously the executives. And in reality, you know, I think that does work. It does actually work very, very well. I think for the other non-executives, you can understand why they might be a little bit nervous about it. You know, if you come onto a board, with no financial service experience, but a lot of data or tech experience, what you don't want to be is caught up in all, you know, the actuarial assumptions for the life projections. I mean, that can be quite difficult. So I think in the way that that is introduced, you have to be very cautious of that, because what you don't want to do is discourage the diversity of thinking and the diversity of experience on the board. So I would just say that's just a watch out, and I'm sure that is something that during the course of doing this you can think about it. And the process does iterate. So to your second question, there was a review obviously of the SMCR regime in the UK in 2020, where the regulator looked at it and said, you know, what's working, what's not working, and actually most things were working well. But we've just introduced a new consumer duty, which is really about what Willemieke was talking about, putting the customer at the heart and your good customer outcomes, and the SMCR regime has been sort of used with that in the introduction of that new consumer duty, and I think that's very helpful because everything is therefore coherent. It makes sense, you know, what it is you're trying to do, because ultimately what a firm's trying to do, they're trying to deliver good customer outcomes, and therefore people have to be held to account for making sure that that happens, and it has to be clear who was accountable. So in many respects, I think it's quite a logical thing to do. It may not always seem like that. And I think consultation papers and all of those things, I know the regulators love them, and they're very, very important.
I love them.
You love them. We all love responding to them. You all love doing them. But you know, they are really important, and I think you can learn a lot from other countries that have done this. But I don't want to be flippant about it, but I would genuinely say that businesses that are run well should not be concerned. Clearly, there is a devil in the detail. You have to get that right. But I would say the pressure is almost more on you as regulators to make sure that the way you implement is sensible and measured.
I think that's a fair point. Can I ask you maybe, and in that spirit, so looking at things from the challenges side, so from your experience or the experience of Aviva and observing the regulators, are there any particular challenges, pitfalls that you would say, okay, as you now, Central Bank of Ireland and Irish financial services ecosystem, as you embark on this, you should watch out for this? These are the things, these are the pitfalls, or has it been fairly... Because insurance came in a bit late. I mean,
a bit late?
Well, later than the banks, I mean.
Just a little bit.
Yes. I mean,
and the banks practiced it, and then
exactly,
we refined
that's what I meant.
So obviously there's always challenges with implementing new legislation, and you know, at Aviva this impacted something like 18 of our subsidiary companies, so it is a very, very big implementation, and so never should be underestimated. And I think, you know, making sure that everybody's statement of responsibilities is correct, that the training is done and people understand what it is they're sort of signing off, certifying effectively. I think that's all a challenge, but you can get there. I also think, you know, I would ask you the question, I think that there is a challenge for the regulators. In any new implementation of any regime, you also have to train all of your people. And so in many respects, I think one of the challenges that we have found is maybe the firms and the regulators have not actually been at the same speed in terms of the implementation. And therefore, it is really, really important that that in essence is the case, because otherwise you've got firms that are sort of raring to go, ready, and regulators that perhaps haven't caught up, or the other way around.
No, that's I mean, that's spot on, and I think and we'll come on to this question of sort of the challenges for implementation shortly, and I think they are, as you say, as much for us as they are for regulated firms. I mean, one thing that it's worth mentioning in the spirit of what you say there is, as we were preparing the regime and engaging with those who have been implementing it in the UK, I think one of the strongest messages that I heard from that experience was how firms in the UK went about implementing was absolutely critical to their ongoing experience. In other words, if we get it right in our implementation process, so we talked already about sort of adopting a substantive focused approach as opposed to a compliance approach, focusing on getting it right in spirit, that firms who did that really had great success, the type of experience you've described, Amanda. Whereas if it was more, if you got off on the wrong track, then it was hard to pull back. So I think that for us there was a lot of learnings in that. Maybe I'll turn again then to Patricia. Talking about financial firms and sort of the impact of this. I mean, what do you think might be the impact in real terms on the functioning of financial firms? I mean, when you're engaging with your members, and what's your sort of sense of what will this really mean for them over the next period?
Well, I think in terms of the practicalities, the first thing is communications more broadly. So whilst it is in existence in the UK and Australia, we are the first country in the EU. Yeah. A lot of our companies are global. And like most people, even though they were aware it was coming for a long time, it's only really in the last number of months that global boards are going, what is this thing that's happening in Ireland? The extraterritoriality piece is massive, including training employees who are not here in this country at all on conduct standards. So again, we've developed e-learning solutions for that through the IFS SkillNet that people can train up their employees. But ultimately, it's initially putting together cross-functional teams. As you say, it's really important that people aren't just viewing it as a project, that they're actually saying this is now changing, transforming how we do business, because otherwise it's not going to work for anyone. So people have put a lot of time into who's leading. In most cases, that's compliance people. But then in the context of the conversations, we've had a lot of legal opinions, for example, that we don't have to change contracts, but we do have to do addendum letters. But then the individual has to ultimately agree with those prescribed responsibilities, and what happens if they don't. So we're not worried really about the 95% of people who, it'll be pretty clear. But each one of those individuals who has a problem is going to be a massive, conversation / HR piece going forward. So I think that the global, just getting people in the group familiar with it. And then I think going back to the INED piece, I think people are genuinely concerned about our competitiveness. So we want to attract, really bright people who aren't of our sector and particularly females in the context of the gender balance targets. But if people can get easier jobs in other sectors, then that's really it. It's not actually, and I'm not so sure that's even a fear factor. It's just simply, well, that exists here, it doesn't exist there. So I do think, therefore, if we tell the story well as a sector, that this can give you more confidence in our sector and it's going to make you better, that other sectors might almost follow suit. That would be a really nice piece. But equally, when you think about when global companies decide where to invest, if they see it as a barrier and a cost, then they might just choose not to do it here because all these people are going to be caught here versus elsewhere. So they're all just factors that people are considering, I think, in the mix. But be assured, people have a lot of people working on this, and they're absolutely, obviously, determined to be on top of it.
I think that point about competitiveness is an important one, and very much to the sort of the in the sort of as I mentioned, as we're developing the framework, this idea that you want the financial system to be a well-functioning and efficient financial system that is really delivering optimally, right, for consumers, for users, and for the economy. I think that's really important. And I think you're absolutely right that I think you said, sort of telling the story. I think that is really, really important, because there's so many ways this can be heard and misheard in terms of sort of explaining to everyone, sort of what goes back to the public expectations question as well. I think that's really important. Maybe Caroline, coming back to this question, if I may, on sort of which has sort of featured quite a lot in the discussions and the consultation. And I think it's a really rich one. It's sort of that question of collective, and I don't sort of just mean sort of well, is it collective or is it individual accountability, but rather the idea that the whole purpose of a firm is to be a collective and more than the sum of its parts, precisely because it's collective decision making and collective accountability. And then the idea, so is there a tension between that and sort of individual accountability? Where have you ended up in your reflections on that, or what are your concerns or perspectives?
It was probably the key thing that came back from members in terms of a concern that they have about how these two pieces get reconciled. So I suppose just to reflect, you know, the feedback that we got was that obviously we all know non-executive directors, they're not involved in the day-to-day operation of the business, but they play absolutely critical role in terms of the direction that they can give in strategy and bringing resources and access to networks, etc. And composition is important on boards, of course, because of what it can bring to board effectiveness. But nobody has all of the skills. And so, you know, you will obviously have domain experts on boards, but those domain experts, you know, can't be overly relied on or allowed perhaps to capture the discussion or the direction. So I suppose it's just about how do you balance all of that together while maintaining that collective responsibility that is important not only at the board level but also all the way down through the organization. So I suppose the reflections were, you know, how does, for example, a chairperson balance the inputs of a domain expert at a board meeting if there's a divergence in opinion, if there's a lack of consensus, but yet a decision has been made, will everybody walk out the door to implement that decision in the same way? So these are, I suppose, some of the challenges that were emerging in the narrative back up about this particular issue that I think it was just very, very difficult to try and get a reconciliation between those two things, and it stands out as a concern.
No, that's important. I mean, Blanaid, I think you've been thinking about this issue as well a little bit. What's your reflection?
I agree completely. You know, firstly with everything Caroline has said, and it's interesting if you look at the FCA study of what went right, and one of the things they picked out that went wrong is they felt they didn't communicate how collective responsibility worked. So it is a communication issue, I think, and two things really stand out for me. One is we tend to assume that responsibility means the same as accountability, as liability, and the three are not the same. And so you can be responsible and accountable without being liable, and that's where the reasonable steps come into it. And so I think of collective responsibility is absolutely key to get the benefits of diversity, to allow you utilize your board, but also individual accountability is how you operationalize it. That is your part in the collective. And when I listen to some of the concerns, I think they're actually there already, because if we look at the underlying company law system, which currently applies to every single director on the board, the decision is a collective decision. But if you look at company law, the duty is a duty on individual directors. So we have it there. And how does it work? It works because it's implemented in a way that says, you know, what we expect is what a reasonable person in your position would do, and we take that into account. And that's exactly what this regime tries to do. It says, you know, there is a collective. This is the decision making. We understand you can't be an expert in everything, but here's what we expect you to do. And I did like the guidance in that respect. It says, inform yourself enough to be able to challenge, to make sure that you are, you know, what you're hearing makes sense to you. But at that stage, that is the level of your responsibility, and if you have taken reasonable steps. So I would say to people, it's here already, and it is working. It's just we're not seeing it in quite the same way. So it's back to communication, I think.
Yeah, that's. I mean, I don't know, Willemieke, you know, in the Netherlands, where you've had this sort of very close focus, I think, on sort of the functioning of firms, the culture of firms, the governance. I mean, what's your perspective on this tension between the individual and the collective, and how have you thought about that, or what are your other reflections, sort of around the sort of the cultural question that sort of fits here?
Well, I think you need both. So you need individual accountability and clarity on that, but you also need the collective perspective, because otherwise you may miss the key risks within a firm. And also I think then you would be fostering silo mentality, and we don't want that. So I think board members should be very much aware of their own area, but also of the collective area. And we had quite an interesting example in our supervisory practice where we observed a board, and I was reported back that my associates actually observed a fight because all of the board members were acutely aware of their own individual accountability, and they thought they had to protect their domain, and they saw their role as and the context as a more or less zero-sum game. So if one got an advantage, then the other got a disadvantage, and they thought it was not constructive, and they thought it was not pleasant, but that was how things were done. There was a lot at stake within the board, and what we saw was that this position was hampering the quality of decision making because they couldn't come up with a decision, and very important issues were put off. And at first, they said they thought that was part of normal business, that was part of how business was being done. And we told them that was not the case, because effective business can't be done if you are not coming together and look at the important decisions that should be made. And what they did, interestingly, because of the supervisory board who challenged the management board to address this issue, they had a thorough discussion about what their shared goal and their shared vision should be. And then they were still aware of their own domain, but now they had another context to test at. And that worked really very well, even that well that they repeated that exercise with their senior executive teams as well.
So that's really, it's very interesting. I hear a lot of consonants and some concerns in how you have described all of that, those last three interventions. And I think it's, if I think back to the things we've heard during the consultation, I think there's two things. One is, and this is coming out in what you're describing, one is that there's a risk that in the mindset, be that the regulatory mindset or the mindset amongst firms, that the mindset becomes more individualistic at the expense of the collective. So that's a risk, I think, to face. And we would say, well, what we've tried to articulate, as you say, a lot of the guidance is, no, it's the balance, it's the integration. But nonetheless, the risk is there, and I think we have to be very alive to that. And the second thing we've heard a lot of is you can drive individual, a bit like what you're describing, Willemieke, you can drive individual behaviours, which are about, yeah, I get the collective, but I'm on the hook for the individual, and therefore, I'm going to intervene when I mightn't intervene. I'm going to keep notes that are, as long as my arm, etc., etc. And that you drive these kind of ultimately suboptimal behaviours. And we'll come back in a moment, and I think those are really important risks for us all collectively in all our various parts of the ecosystem to be alive to, and to really make sure we get it right in the implementation. And I'll come back in a moment to that question. Okay, so how do we, given the things we're hearing, which a lot of which is coming down to, okay, it depends on how you implement this. It depends on, you need to get it right. And we'll come back to that in a moment. But I did want to go to the floor. I know there's an awful lot of interest in this, and not only in its substance, but also given that we're sort of getting to the publication of the final regime. And I'm sure there are people from all sorts of perspectives who have a question or a comment. So if there are, now is an opportunity, and I don't see everyone very clearly. I see here at the front, there is someone with the... we've got a mic coming, yeah. So if you wouldn't mind saying your name and your organisation, if relevant, and...
Yeah. Hi, it's Anya Hickey, BMY Mellon. I'm just curious if we are able at this point to give any comments around the engagement process around CP 154, and if any timelines around when we might hear further on that?
You're going to have to remember which one is 154.
So
we love consultation.
The admin, I'm too invested in IF at the moment. The admin sanctions procedure, I guess,
Right,
and
sorry.
a
Yeah,
senior
okay,
manager is
yeah,
quite
yes,
interested in
yes,
that, I
yes.
suppose, as being closely connected.
Okay, good. Let me take a couple. There's another one here, and we'll yep, please. Yep.
Jacqueline from Insurance Ireland.
Hi, Jacqueline.
Having been heavily engaged in the discussion, one of the points was what's going to happen after implementation and how the central bank intends to communicate what they see worked well, what didn't work well, and allow firms to kind of learn a bit more from that. And I just wondered, being 5 years in the UK, whether there was anything we could learn from the regulatory approach there, what worked well or what didn't, and we actually need to bear that in mind going forward over here.
Thanks, Jacqueline. Anyone?
Sorry.
I hear a voice. I don't see.
Yeah, Gerry Fitzpatrick.
Hi, Gerry, please. Yeah.
From Zurich Life. I wonder, was any of the panel concerned by this separation and deferral for one group of people in the framework to others, in the context of, we talk about leadership, tone from the top, and the danger that might have in relation to the messaging to executive management, that rather than defer the whole thing for a period to get the framework right, that one group have been excluded for a period of a year.
Okay, got you. That wasn't sure first. Okay, that's three. Let me take those. Maybe I'll take the CP 154 question. And thank you for the reminder. So yes, that is, we are in the process of analysing that's about the. There's a whole series of administrative sanction and enforcement changes that come through, not just related to the IAF, but for example, relating to some of the constitutional changes or implications of recent decisions and how that how those will be implemented. So that has been worked through, and I can't give you a precise date, but certainly the lag is not too great. So that's we haven't lost sight of that at all. But on these two questions, I mean, maybe Jacqueline, I'll hold your question for a moment, because I want to come back in the next round and really dig into that question around implementation, ongoing engagement, because I think that's really crucial. But I think it's an interesting question that's been asked there. So reflections on the sort of what the governor announced this morning, that we've taken this view that actually for the NEDs, the non-executive directors, because of the sort of the specific as we've been discussing, the sort of the differential around non-executive directors, that we'll allow a year for learning. So the question is, well, is that fair to all the others who are sort of the guinea pigs from day one? I don't know whether people have a reflection on that. I certainly have a view, which I'm happy to share. But any reflections on that? Anyone want to have a go at that, or are you all sort of?
I think it depends. I think it depends on how it's framed. I mean, I have to say I was a little surprised this morning, but it depends on whether there's a very clear rationale, and if the rationale is clarity, I think that the question is a good one. You know, aren't there issues with clarity with other parties? Is this something that you're saying, well, this is the leadership board, and you know, this is the board that's driving it, and you know, I just need to see how you're explaining it. Really, I would have some of the same concerns. Yeah.
I feel that coming back in my direction. Any other? Anyone want to say we shouldn't do it at all?
Well, I was going to say everyone would want it to be postponed, but I guess in the sense of that particular group, I do sense, because again, they weren't in the UK model, so I think people are more comfortable where they've seen something in practice.
But don't overplay that, because if you think about the UK model, you effectively have the chair, the Risk Committee Chair, the Audit Committee Chair, the Nomination and Governance Committee Chair, and the REMCO Chair included. Yeah. And now, so, you know, if I take the Aviva PLC board, there will only be 3, therefore, non-executives not caught by the regime. So I don't think it's quite as dramatic as perhaps it sounds in terms of the difference, as Gerry mentioned earlier. And in a way, so I don't know anything about this difference, and I wasn't here this morning, so I didn't hear.
Yes.
But in many respects, the executives and individual accountability executives and getting that implemented, you can learn an enormous amount from that. And maybe the fact that this has been such an issue here, this collective, and I've not heard it, I can genuinely say that in the 5 years in the UK, whilst I know it was in the review which came out in 2020 and there was some question about it, it's not been a topic for discussion. It just hasn't. And so I do wonder whether, in many respects, it's been blown into something sort of more significant here, and therefore maybe having that year gives you a bit of time to reflect on what the right way to implement is, and that is purely without any real knowledge of it. But
No, that's very helpful. As it comes back to me, I think that's a very helpful. Please, Caroline.
I think actually, if I could just support what has been said there, I think a period of reflection based on maybe that perception gap at the moment is helpful.
Yeah, no, thanks. And I think that's how we see it. Look, I think, as the Governor said this morning, the IAF has been a good while in the making. The legislation comes into effect at the end of the year, and so in terms of for example, the conduct standards, and to be clear, that's legislation which we don't really have a choice to exclude non-executive directors from, so the conduct standards will apply in any event. So there's a kind of a getting used to that anyway. And then the date of mid next year for implementation of the SEER again feels to us very strongly to be the right balance in terms of momentum, meeting expectations, getting everyone sort of over the line. And very important to say, again, in our implementation of it, we also embed reasonableness, and therefore our perspective is not, a little bit like we've said for directors. We don't expect someone who's been appointed to a director for the first time to have the same experience and insight and wherewithal that a long-established director would have. So similarly, as we're implementing the framework, we don't expect the same things from day one that we would expect as things have been embedded over a while. But I think you described it very well, Amanda. There's that sense of there's a particular the particular cohort of non-full-time people who clearly what has come out in the consultation, and we have been listening. There's a nervousness and a sensitivity around, which I think, on balance, will benefit from that kind of extra year to embed things. So it's a very good question, and that's kind of how we would answer it. Let me turn, if I may, because I'm really interested in just spending a little time on the kind of the implementation question, because that's where we are now, looking forward. And I think what I'm hearing time and time again from the discussion is the importance of how we all go about implementing, and that will be the secret of success. I mean, Blanaid, maybe I'll start with you this time. Do you, in your reflection of this, what might you see as being the main challenges for or aspects of successful implementation?
Yeah, I think you need to look at it at the level of implementation by the firm and then implementation by the regulator. And so looking at some of the concerns which have been expressed in other jurisdictions, there's a concern within a firm that it will engender a fear-based culture, and that people will be afraid to speak up, and whistleblowers included, to highlight errors, because people say, don't put that down in writing, don't want to know about that error, because they will be afraid of the consequences of that. And that is something that is an issue of culture in a firm, and leadership, and strong whistleblowing policies. But it is a very, very grave concern, and it's clear. And then looking at it from the CBI's perspective, I think what it has to be seen, and I'd welcome your views on this, I think it has to be seen as a question of rewarding honest dialogue, where somebody says, I got it wrong, and these are the steps, this is why it was the wrong decision, and that's okay. And it has to be okay to make mistakes in that way. And there's good indications, both from the speeches that you and your colleagues have been making, but also the guidance. And there's a line in it that says, you know, perfection is not the required standard. And that's great. Yeah. But is that what you'll do? Yeah. And that's what people are worried about. And so, you know, I was curious, talk a lot about values. So I was looking at, as you will know them well, of course, Gerry, the CBI's mission statement and vision statement and values. And it talks about the value of being trusted by the public. And it talked about the importance of being respected by your peers. And they're two great things. But I wonder, do you now need a third limb, which is respected by regulated entities? And does that need to be part of the vision that is absolutely, we talk about it, embedded? So I do think it's a proof of the pudding thing. You know, we won't know till we see how it's implemented. And if it's implemented properly in that way, and, you know, and actually we are seeing fitness and probity is implemented in that way in different jurisdictions. So where people make errors, and we saw that in the Barclays case or in a Citibank case, was drawn to my attention during the week. People made errors, and that wasn't the problem. That wasn't what caused the fine. The problem was lying about them to the regulator or to their own firm. So if that works, you know, if you are honest to what you're saying, then I think it'll be fine.
That's really, I mean, if we could bottle that, I think you've captured exactly the kind of the challenge that is there, and that's really, really helpful. Caroline, from your perspective, what does, looking forward to 3 years' time, we're going to be carrying out our review that we said we would do. I mean, what does successful implementation look like to you, taking that kind of 3-year perspective?
So I suppose a couple of observations. I guess success would be where senior leaders in organizations are really clear about what their accountability means in the context of their day-to-day jobs. I think, you know, regulation is only one lever to bring about change. And change within organizations also means, you know, positive impact on cultural change. And so I think that there is an element here about higher industry expectations and that having an impact within organizations. So I think an opportunity and a good outcome in the future might be where, you know, you have elevated professional standards and where people take a kind of a deliberate and systematic approach to professional development, training, effective communication. That would be a good outcome in the future.
Thanks, Caroline. Willemieke, and this is sort of carrying on from the point that Blanaid made. When you look at how you supervise for governance and culture, that issue of the supervisory relationship and sort of how you calibrate sort of to, Blanaid used the phrase sort of respected by the regulated firms, and part of that is that you've got the calibration right. In other words, that a firm that you trust, they kind of know that you trust them, and a firm that you kind of have your doubts about, you're calibrating along that spectrum. Is that something that you reflect on?
Yeah, sure, we do that. I think you have to ensure that there is a level of trust between the regulator and the financial institution that is investigated or that is talked with. And at the bottom of our supervision lies an open dialogue. And that means that up front you are talking with the financial institution what you're going to do, what your method is, how you collect your data, how you come with your findings. And you do that in a kick-off stadium, but you also do that afterwards when you present your findings and leave room for questions, trying to answer very thoroughly, very adequately all the questions there are. There should be room for different perspectives, and only then there is a final result and a way forward. And I think I very much agree with Blanaid that accountability and responsibility are two totally different things. So for me, a good outcome of the implementation of the IAF should be that it enhances responsibility. Accountability is, from a legal point of view, when you hold someone accountable for his or her actions, when you speak in terms of liability, when you know who to look at in way of breaches or failures or whatever. But what we are looking for is not that. What we are looking for is feeling responsible, and that means that you feel that there is something you can do in your own power, in your own control, that you want to do. It's a feeling of duty, of answerability to your task, and that's something completely different. And I think that is exactly what we're trying to achieve, because you want people who are not removed from their task, but who have psychologically seen a very low barrier to what they are doing and a very high understanding of the impact of the work that they do on the interest of consumers. And what we are trying to do is to have healthy, innovatively, strategically strong financial institutions that work in a safe climate, and that can only be accomplished if people feel responsible. And that is something different than being held accountable. That is, of course, necessary, because you should be clear on what is expected of you and what type of behavior is expected of you. But it's all about responsibility.
Thanks, that's really that's powerful. Amanda, we've heard a lot and discussed a lot, and we've said a lot. If you were sort of looking at in Ireland implementation now, moving forward, would there be any particular sort of advice you would give, or sort of exhortation you would put on the table?
So I think maybe a couple of things. I think firstly, the education and the way that you embed this within your firm is critical, and don't underestimate how long that takes, and how thorough you have to be in that process, because if people are going to be held accountable and are responsible, they have to really deeply understand what that means. Now, I think on the whole, to be honest, because we're in financial services and we have a deep-held responsibility for doing, pretty important things with people's money, and we make a promise to pay. I do believe that is already there in many institutions. So I do not think that is necessarily a huge task. But however, in the context of new regulation, people have to understand what's different. And so I think spending time on that. And I think the second thing I would say is you shouldn't underestimate the complexity. And it is difficult to implement, and it will be a big program, and it'll be on top of many other, I'm sure, regulatory programs that have already been put in, whether it's differential pricing or all the other stuff that's been done. And it's been exactly the same in the UK. But I do think that, recognizing it takes money, it takes people, and it takes effort, and having it can't be a side of the desk thing. That's important. And finally, maybe the last thing is we're 5 years in, but we're still only now at the point where enforcement is taking place under this regime, as you just referenced. So I think in terms of what this looks like in years to come, I still think, even in the UK, there is still some way to go in understanding, actually, because enforcement takes so long and because these investigations take so long, what this really means. So I think, the recent case, the Barclays case, has been very, very powerful in the UK. And this is really the first high-profile case under this regime, with using evidence from this regime as opposed to a sort of crossover from previous ones.
Thanks, man. I think how Blanaid sort of described the distinction between sort of what are mistakes, and sort of that's, as we said explicitly, we are not looking for perfection, and what is then sort of egregious behaviour. I think that's sort of kind of a telling distinction. I haven't forgotten, Jacqueline, your question, which I'm going to come back to now, having sort of gathered all of these comments around implementation. Well, let me turn finally to Patricia on this point. implementation, what's your perspective? I mean, what would be your main sort of exhortation to the central bank?
Well, I think certainly there's two differences. You're dealing with individual human beings and what that's going to mean for them and then for the company. And I think don't underestimate that, because it is deeply uncomfortable for those individuals. But like even things like disciplinary action and clarity that, you know, your career could be over even though you might win an appeal because we have to notify midway through. There's all sorts of things like that. So, you know, we do still have to iron things like that out. But I do think that this is about building trust, and it's about making us better businesses and doing... So ultimately, I think you have to approach it from that perspective. But the way to do that is two ways. So, like industry... I must say, I don't think really trusts the regulator. I don't think the regulator trusts industry. So if we can use this new tool through this dialogue to really make inroads in that. And the best way through that then is in consistency in decision making. So again, even on practical things like minutes, you know, depending on who your supervisor is, people want tomes or they want lightweight. So if in your modelling, be as consistent as possible. And then I think for industry, you know, just like everything else, we have a role to play too in terms of amongst ourselves figuring out what best practice looks like and reasonable steps and all of that. And that's what we do in terms of facilitating that dialogue between companies. So I do think we all need to work together, but it's in our interest, in your interest, and in the economy's interest for this to work really, really well. But we have to approach it from that mutual space that everyone understands in principle where we're trying to get to, and we're following through on that.
That's a really nice point about which to nearly conclude. And I think you've sort of finished on sort of it's in everyone's interest. I mean, I think what the objective of all of this is a optimally performing financial system, which is delivering optimal results for the users and consumers and for the economy, including the European economy, because we heard earlier what an important part, of the European economy the Irish financial services system is. So that, there's a kind of a shared objective there to be as good as we can be in delivering on those outcomes of the financial system. You also used, I think, very tellingly the word trust, and I would say yes, there's an opportunity here over the months and years ahead to deepen and enhance. I mean, I'm not sure I'd go as far as to say we don't trust each other, but to deepen and enhance the levels of trust, because as we work mutually and reciprocally to implement this, we will be able to get to better understandings, better predictability, consistency, etc. And that brings me back, I think, to Jacqueline's point, which for me is sort of a really important sort of sense coming out of this discussion, which is the engagement that we have experienced, and which I mentioned at the very beginning, has been really important in terms of shaping where we're going with this, and that engagement I think needs to continue. So we can't sort of say, well, we've done our engagement from either side, we've done our engagement and now we'll just go away and we'll implement it. It's got to be much more continuing, organic. And I come back to that kind of point again, which I think is important, and we built it in, is that this is not a once and done thing. This is something which we will want to review, as the UK has reviewed, and see where we are and make sure it's working. But in the meantime, there's a lot at stake. So that's been very clear from this discussion. There's a huge amount at stake, and so it behooves us all to really work in the right spirit to deliver over the coming period. So look, I think that's been a really rich discussion. Amanda, Patricia, Blanaid, Caroline, Willemieke, thank you so much for the insights you've brought, and round of applause, I think. Thank you. Thank you. Thanks.